Hello everyone. Today I am going to provide you with an overview of MCX Natural Gas technical outlook for the period 3rd of October to 7th of October 22. Prior to giving the view, we will be taking a review of the last week technical outlook which we have shared in natural gas for the period 26th of September to 30th of September. As on 26th of September, natural gas future was trading at 573 and the technical outlook was sell on rise below 620 and 660 resistance level. And as we can see here on the charts, it has formed a kind of head and shoulder pattern with a neckline breakdown below 600 mark. So 600 and 620, that was a strong resistance, and any pullback toward these levels was recommended fresh selling. Now if you see how things panned out last week, so here we can see that last week it made a high of around 586, slipped down to the lows of 531, and finally ended the week at 561 in green plus 0.94%. So almost 1% up. Natural gas ended last week at 561 and it formed a kind of doji on weekly charts, indicating some kind of pause of the ongoing correction which has started from the highs of around 801 levels. So in last 6 weeks we have seen that natural gas has corrected from the highs of 801 to the lows of around 531, that is almost 30% from the highs, and the counter has entered into a comfortable zone close to its positional support range of 500 to 425. So technically we believe that the downside is still open. Any pullback towards 600, 625 odd levels can be looked for contra trading shorts. The major resistance on the short to mid-term time frame for natural gas will be at around 650 levels. So till the time this counter is trading below 625, 650 zone, it can be looked for sell on rise towards the resistance zone. On the flip side, on the lower end, dips towards 500 followed by 425 can be looked for fresh contra trading shorts or longs. So overall, we can expect that natural gas can consolidate within a broad range of 425 and 625 with a sell on rise and buy on dip outlook. Dip towards 500 and lower levels can be looked for covered call long strategies. On the other hand, any pullback towards 625 to 650 odd levels can be looked for contra trading shorts, keeping strict stop losses. So overall, for the coming week, the bias is very clear that we are expecting sell on rise on the pullback towards 620. On the lower end, dips towards 500 to 480 odd levels can be looked for trading longs. In respect to the technical derivative strategies, recently we have initiated as on 20th of September. The first one was crude oil, where we were expecting a kind of pullback. So we have a covered call strategy in crude oil, which was initiated on 20th September, where we have gone long in crude oil futures and we have sold in the money 6,700 call in the ratio 1:1. So as per the payoff diagram, we can see here that the break even of this strategy is over and above 6,375 levels. That means closing over and above 6,375 as on 17th of October. This strategy will be in plus. So though we have seen this strategy entering into green territory, last week we have seen this strategy was almost plus 4,000 per lot. But by the end of the week, last week we have seen that the closing was at around 6540 mark. So this strategy ended slightly in red last week. This strategy is still open and we hope that there will be a kind of pullback in crude oil because that counter is also trading in oversold zone. In respect of natural gas, the last strategy, positional strategy, was initiated as on 19th of October, but this was strategy was only for 4 trading sessions because the expiry was on 23rd of September, and we squared off this position as on the same day in plus 4188 per lot. The earlier positional strategy in natural gas was initiated as on 15th of September, where we have gone short in natural gas at around 715 levels, and we covered it by buying 720 call and selling 640 put in the ratio 1:1:1. So the maximum profit was below 640 levels in the tune of almost 61,000 per lot, and in line with the view, we booked the maximum profit as on expiry of 23rd of September, when this strategy gave the maximum returns of 61,000 per lot. The other strategy of natural gas was also initiated on 15th of September, and there we have initiated a kind of covered call strategy, expecting a pullback, where we have bought 7,000 call for 17th of October and sold 8,000 call for the same expiry in the ratio 1:2. So as for the payoff diagram here, we can see that the maximum profit in this strategy is at around 8,000 mark, where the maximum profit will be 82,300 per lot. And since the expiry is still due, we are holding this position open. Last week it ended in 1100 per lot plus. Thank you viewers for your precious time. If you find our content relevant, then kindly get in touch with us with your queries. You can contact us on the given mail ID and the given phone numbers. Thank you very much for your precious time.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.